Well, it seems like our market is being pushed to the brink. Sales volumes are incredibly low, and everybody is wondering, is the Bank of Canada finally going to relent and lower interest rates come June the 5th? Let's nerd out on some numbers and let's get into it. Hi, I'm Adam Nadler. I'm the owner of Vision Real Estate. Thanks so much for tuning in again. And if you haven't yet, please hit that subscribe button below if you like videos like this one. And if you like this video in particular, hit that like button so that this video can be pushed out to more people like yourself. If you want to chat about this video or real estate in general, feel free to click on the first link in the description below. That'll connect you to a calendar where you can connect with me at a time that is most convenient for you, or feel free to just email me to adam@visionrealestate.ca. Any question you have, and I will send you a virtual video response within 24 hours. Okay, so things are really tight out there. I feel it in my business when I'm negotiating. Buyers have leverage. Now, to add a little more detail to this, yes, we are seeing a lot of sales coming to the market because of renewals, meaning that they've been squeezed and now it is time for them to renew, and it is a bit too much to bear. And when we're talking about mortgages that are in arrears, the share of mortgages in arrears has risen more for small and medium-sized banks than for larger banks. So we are seeing a bit of fraying at the edges. People who are not with A-lenders, people who are self-employed, that's creating a lot of tension in the marketplace where sellers are having a bit of trouble selling, and buyers simply just can't afford to buy at these prices when rates are so high. And so as we've seen all of this happening over the last couple of years, everyone is expecting a huge price crash, but that's not what we've been seeing. In fact, we've just been seeing a huge sales crash. Prices have been kind of just frozen, staying where they are, and sales volume has just been dropping like a stone. So if you are a buyer and you're looking for a deal out there, you have to kind of weed through all of the listings and find those particular people who are in a desperate situation to sell, because not every seller is. The one segment of the market that I really want to focus on is condos. We are seeing a lot of inventory coming onto the market with new listings and not a lot of sales volume to eat it up. Total new listings is up 23.3% compared to last quarter, but the sales to new listings ratio is down 7% compared to last quarter. And in doing my analysis for some investor clients that I have, I've noticed that 70% of all condo listings in the downtown core are either tenanted or vacant, meaning we are seeing most of the listings being put on the market by investors. So I would definitely say that this is the softest portion of the market right now. And if you're looking for an amazing deal, look in the condo sector. So will the Bank of Canada relent on interest rates come June the 5th? The markets are giving it a 50-50 shot. Here's a little excerpt from the Financial Post. They did an interview with Dylan Smith. He is an economist, and he's going to give us a little bit of an insight onto what the Bank of Canada is thinking about moving into this next interest rate announcement.
Dylan, let's talk about some of the conversations you're having at the office. David Rosenberg recently suggested that the Bank of Canada should start cutting rates now. When you take a look at some of the most recent data, retail price index, real GDP, employment numbers, does this suggest that the Bank of Canada is slow out of the gate?
Yeah, I think that is quite an easy conversation around the office because everyone pretty much agrees on this one. There is almost nothing we can see really in the Canadian macroeconomy that's telling us that the Bank of Canada needs to worry about inflation picking up or the economy being too hot in order to start cutting, right? So if we look across the gamut of data, we've seen 3 months now in a row of decreasing inflation and very easy core inflation prints. In fact, we're in target or at the threshold of the target for all of those, and everything is pointing towards a resumption of disinflation going forward there. Growth a little hotter in Q1 than we would have expected, but if you look at the latest trade numbers and a few other indicators, definitely that's going to slow down. Possibility even of some downward revisions there. that data we get towards the end of the month. If you look at, the labor market, we've seen overall this year a weakening in the labor market. There was a bit of a rebound in the latest month, but beneath the surface, still not a very strong report. And certainly would expect some weakness going forward there as well. So, the bank likes to talk about, the risks of cutting too early, but we're struggling to work out what those risks might be. There are two things that tend to get raised. The first is the housing market. And what if we cut rates and everyone suddenly starts wanting to buy a house again and house prices explode? Well, Governor Macklem actually dealt with that in his last press conference where he said, look, there is some risk that, that brings borrowers back into the market. But that will be true whenever we cut, right? So it's not really a threshold risk for, cutting now versus cutting later on. And in any case, we'll just have to see how it goes. We don't know actually how strong that response will be. So they aren't even seeing that as a major obstacle to cutting, and we don't think they should. The second thing that gets brought up less inside the Bank of Canada and more outside is, well, you can't go until the Fed cut rates. That's not true. It's happened a lot of times before. I think we've had 6 in the past, 30 or 40 years, instances of the Bank of Canada easing when the Fed has not been easing. And there's nothing in economic theory that tells you that they have to move rates in sync. In fact, when the economy is in a different place, north and south of the border, it's actually appropriate for spreads between rates to adjust in order to absorb that impact. And so we're seeing a very strong case for the Bank of Canada to start easing, start providing some relief. And if they do so fast enough and quickly enough, they may be able to avoid technical recession. But if they stay tight too long, we think a very negative outlook for Canada.
So will the Bank of Canada ease up on the housing market by lowering interest rates on June the 5th? Let me know what you think in the comments below. What is your best guess? Thanks so much for tuning in again, and I'll see you next time.